Yes, dear students, good evening. Today we are facing a problem regarding huge mosquitoes are biting. So you need to be cautious about pandemic situations side by side. Dengue fever. Yes. Millions or trillions of mosquitoes are disturbing. So, as I asked you to keep yourself free from coronavirus pandemic situation during winter season is problematic. But you the young chaps and young fellows, problem to your side is not that much. Even then you need to keep yourself aside away from gathering. Though we have to move sometimes to the different locations, all including markets, shopping malls, and some social programs. Better to avoid all this. And some questions I'd like to discuss. This is concerned to bank management. Actually, this is a very applied and practical topics. Anyway, characteristics and general direction of forms of financial statement according to BRPD and the Banking Company Act. Banking Company Act as per the 1991 section 38. There was a circular of BRPD, circular number 14, June 20, 2003. There was some specific printed form, and basing upon that, financial statements were to be formed. Some characteristics of this financial statement form, that is, that vertically presented. All financial statements are vertically presented. It should have to be at the international standard, not the traditional way or manner. Better like other financial banking institutions, say when the Lloyd Bank, extraction of Lloyd Bank form and Sonali Bank may be the same. And here, assets and liabilities are counted and assessed on the basis liquid asset. And it maintains contra. Yes, right, left, both should be equal. This prepared as per the observing the economic condition of a certain country. Necessary provisions of transactions are here maintained. Advance, loan. There should have a provision for loans and advances and losses in this connection. Accordingly, should have a provision so that bank can easily express its financial situation. Here gross value all the times. What is the actual gross value? That should be counted. Equity, liabilities, all these things on the basis of liquid asset concept, and it should be published in a daily newspaper of the country. Gross interest must be presented or counted through the profit and loss account. Anyway, then there is a final account. We have to discuss about the final account. Bank deals with the liquid asset, but when there is a question of the mortgage as against loan provided to the clients and customers, in that case, physical assets and attributes are concerned. So, the term final accounts means a statement which results from the preparation of account, showing the profit earned or loss suffered by the firm and the financial state of affairs of the firm at the end of the period concerned. Such for the financial statement, basically for it may be for the 6 months or the annual for the 12 months up to June 13. Financial statement or January 31st. But they should have the in detail explanation in the profit and loss account. Gross profit may be expressed, and after that profit and loss appropriation account. In the profit and loss appropriation account, next profit will be assessed and declared. And then when it's a question of the balance sheet finally, then balance sheet is concerned as per the Pyle and Larson. Balance sheet is a financial report showing the assets, liabilities and owner's equity of an enterprise on a specific date. So a specific date, I mentioned this 13 June or it may be 31st December. In the 31st December or 30th June, assets, liabilities and the owner's equity must be mentioned there very clearly. Harmon and others, as per their opinion, balance sheet is a formal statement of assets, liabilities and the owner's equity of a specific debt. The actual financial condition and the strength of the organization is focused for the balance sheet. Actual condition of the reserve, liabilities, assets position, present value of the assets. Say for the so many thousands of assets are there under mortgage registration of a certain bank or bank. I mean, borrowers taking loan, keeping a huge property mortgage, and that value of that mortgage property may increase. And here, no question of present market value concept. I mean, if the rate is higher, then that higher rate is the present value concept. So banks may earn a huge amount of money from the mortgage property. Then Actually, it expresses assets and liabilities. What is the actual condition of the assets? What is the proportionate position of assets and liabilities? The liabilities capital is in the liabilities part, but bank loan is the liability, capital is the liability. Okay, but this form a strong capital structure. So this is the indication of right way running of a business. Rules for preparation of balance sheet. Rules for preparation of balance sheet as per the Bank Company Act 1991, Section 38, which was amended in the year 2003. As per the International Standard 30, BRPD Circular 14, 20 June 2003. There are the two parts in the balance sheet. One is assets, another is liabilities and part of capital. As per Bank Company Law Act 1991, Section 38, Schedule 1, 2003. There is a specific and printed form that banks need to follow it. It cannot be changed or deviated. Here, assets and properties part. Number 1, cash in hand and with central bank. Commercial banks keeps a huge or certain percentage of capital to the central bank, or some other liquid assets to the central bank, and it gives a certain amount of money for starting the next day banking operations and functions. That is cash in hand. Also reserve or different deposits to the central bank is also liquid asset. Balance with other banks. Banks may keep a certain amount or even a huge amount of money to the other banks or different other financial institutions. When necessary, they will collect it in their own branch or head office. Then money at call and short time notice. Sometimes banks provide loan facilities for a short day notice. In that case, if bank wants back that money for a very limited, within the limited period of time, within the very limited period of time, they maintain short. They keep deposit and reserve to some other commercial banks. And when I say, then they ask for return back that amount to certain commercial banks, say for the Sonali Bank, Janata Bank or Lloyd Bank. When bank invests in the different share bond securities, treasury bond, bill of exchange. In these cases, bank can invest. This is a liquid asset, liquid money investment for liquid asset. This is very profit oriented. These short-term assets are very profit oriented, and that's a very nice source of earning for a certain branch or bank. Then loans and advances. Loans and advances are provided to the clients for business affairs or as per the product line. So, loans and advances, this is also investment, and here bank can procure a huge amount of money as interest or service charges. Then bills discounted and purchased. By discounting bills or purchasing bills, bank can earn a huge amount of money. And with the maturity of that bill, say, it can sell out at a above rate or can gather or gain, higher rate of interest. Land, building, furniture fixtures, and others permanent fixed assets. Land and building is the biggest asset, but it's also a nice asset because generally sales price of land all the times increasing. If someone bank is having a 10 crore taka asset, after 5 years this will be converted into 20 crore taka. So that is a very important thing. Then other fixed assets. Investment in the subsidiary companies share in. Then reserved ornaments, stamps, and different other liquid assets. Also advance rent and advertisement expenditure, that is for the longer period of time, if it's so, then that will be also treated as asset. If it's for 3 years, 4 years, 5 years, so that will be liquid asset. Security deposit and some other new products are coming through the different banks and financial institutions. Then the next point is non-banking assets. Then some other earning, say a property is mortgaged as in against a loan amount 10 crore taka, and the party is defaulter. In that case, bank has to call auction and to sell out that land or property. During auction hour, that has been found. It was earlier, it was cost taka 10 crore. Now it's converted into 30 crore. So there is a huge gap. 10 to 30. 20 crore taka is surplus.
Hello viewers, welcome back.
So this is very important thing, and this is a nice income. Sometimes bank can purchase and procure share bond securities of different banks, bigger leasing companies for financial institutions. In that case, when it's necessary, then that liquid asset may provide a huge profit, a higher price of that property. And liabilities on the capital assets. Number one, that is the borrowing from other banks. Banks can take loans from other banks and financial institutions or even from the Bangladesh Bank or the central bank of a country. Then deposits and other accounts. Bills payable is a liability. Other assets, other liquid assets, that is also liability. Capital and shareholders' equity, some capital and shareholder equity, that is number one, share capital. A statutory reserve. As per the Bank Company Act 1991, Section 424, this is 20% money banks needs to keep as reserve in the central bank. Other reserve, surplus in profit or loss accounts. Anyway, in the next class, we'll discuss in detail about rules for preparation of profit and loss account. Thank you very much. Keep yourself sound fit and don't go outside. Rest of